Naira denominated card payments for international school fees and medical bills, services that were previously suspended due to prolonged foreign exchange shortages. Let's look at this and other matters now in the fixed income market with Mr. Chuka Nwachukwu, is a chief dealer, group head of trading at United Bank of Africa. Great to have you on the show. Good morning.
Good morning, laddie.
So yes, I did try my Naira card recently abroad to make payments, and it worked after years of not working, and that was quite a relief, at this point. So, did we get any benefits from the suspension in the first place, in your opinion?
Thank you very much. Well, the suspension wasn't something that the government or the banks planned. It was a result of the scarcity of foreign currency, FX, at that time. But with the introduction of,
all right, there we're having some network glitches there. And, definitely it was quite a shock, to many users. We're trying to get...
And then, of course, we've seen increase.
All right, Mr. Nwachukwu, sorry, I lost you for a moment there. It was frozen, but you can finish your thoughts, at this point, okay, because I'm trying to, find out. You did mention that it was because of, the scarce dollars. That's why the suspension, came in the first place. People couldn't use their, Naira cards for any kind of payments, that had to do with dollars. So you were explaining the benefits.
Yeah, so we couldn't, most banks or barely all the banks stopped it. But with increased liquidity in the system, it's something that the bank decided to take advantage of. And, for customers, the benefit is huge in the sense that, you no longer have to go to the, BDC markets to, to fund your activities that you couldn't fund through the interbank. But then we only sound a little bit of caution because this increased liquidity we've seen in the FX market, is majorly from the FPI inflows. And then, we all know that some of these FPI inflows are, are hot money, as we call them, and they can pull out at any time. And so, for me, I think the banks have to be cautious on the Naira, debit card FX transactions. But by and large, it's actually a good one for the country and then for customers.
Right, and I believe some people would see this as a good thing. At this point, able to pay for school fees abroad, pay for medical services abroad. But personally, I feel that's importing. At this point, we're sending out very important dollars that we need here when we can have those kind of services right here. In Nigeria, we can have good schools. We don't have to send kids abroad. At this point. But is there any risk? Now that the suspension has been lifted, any risk that we're putting pressure on the Naira again?
Yeah, like I mentioned earlier, the only risk I can see is the fact that majorly the inflows we've seen in the market are majorly from the FPIs, and then I said earlier that the caution there is that the FPIs are mainly hot money. Some of them stay between 6 months to 1 year. And so what happens when they pull out? That's where we have, we might have a concern. However, also, some of these transactions have limits. And then, the different banks will actually, have limits for these transactions. And that also more like a check, so that people don't, the customers don't go withdrawing and then they're making transactions that are above, that banks are not able to, to fund. And so all this, is part of the check put in place to make sure that this reintroduction of this Naira cards, works efficiently, and then of course it doesn't put more pressure on our FX demand.
Right. So you mentioned there that the liquidity we're seeing right now, the source, is mostly hot money. That's money that's coming in for a short time. I guess the opposite of that would be cold money. Any sources for cold money?
No, and not at all. I mean, it's just a term used, for short-term investment inflows into the country.
Yeah, because it'd be nice to see some patient dollars, coming into the country that's staying more than, just a couple of months or maybe a year. But let's pivot to the fixed income market now. See the average benchmark OMO yield, that dropped by about 28 basis points, about 25.49%. I've heard it's largely driven by strong buying for December 2025 instruments. What would you say are the key drivers behind this surge in demand for this December 2025 maturities?
So basically, OMO is mainly, for now, mainly used to attract the FPI, the hot money I mentioned earlier. And so we've seen the yield, move majorly higher than the NTB, NTB. And so, like, for example, the OMO result that came out, that was early this week, about yesterday, we saw it move, from 21 levels to 23 levels, and all in is around 25, 26 levels. One of the reasons, is also liquidity in the system. We've seen system liquidity in positive of 1.3 trillion presently, and that also has affected trading in the fixed income market. So we've seen a lot of bullish sentiment because some of this liquidity that came in, investors and then banks actually reinvested it in fixed income securities, and OMO especially is very attractive. NTB is around 15 levels, and so if I have OMO at 23 levels, all in at 25, then it makes a whole lot of sense. Don't forget that inflation is around 22 levels, and so it only makes sense that CBN make OMO rate attractive to be able to attract investors due to considering the inflation level we have.
All right, let's look at the Treasury bills now. I think the NTB yields, the average one, that's slightly contracted by just, I think, 1 basis point to 60.75%. But this despite buying across all maturities. What do you think happened here?
So basically, we've seen a decrease in investors' interest in Treasury bills, and that's why you see a lot of activities on the OMO side. Specifically the negative yield, is what is affecting investors' interest. And so most investors are seeking for alternative investment, that especially with, what is happening in the equity market. And you've seen that, we've seen stock price, go as high as some around above 100 Naira. And so ordinarily, it makes more sense for investors, to shift attention to equity market, and that's why we've seen a lot of investors' appetite declined on the fixed income market.
So you're really seeing that happen at this point. We've heard some analysts say the equities market is getting the attention right now because most of those fixed income investors are moving into the equities market. You're seeing that play out, really.
Yes, so that's what we've seen play out. Fixed income market and equity market, operate opposite. So when fixed income market yield, is high, the investors obviously, move to the fixed income market, and that's why, for the past months, 7 months, for example, we've seen yield on the fixed income market go as high as 23, 24% for NTB, and then of course Momo move as high as almost 28% all in. And so for now we are seeing that those activities or those attractive investment on the equity market, and that's why we've seen that most of the investors are moving to equity market where share prices of companies are very high. And so it's expected that this level, will continue to have, this a decrease in investment. Another issue again is the fact that DMO, looking to borrow, but again looking to borrow at more cheaper levels, and so the youth we are seeing at the youth level we are seeing now, is a result of DMO's activity. Try as much as they can to borrow at the cheapest level. Don't forget that our debt service is very high, well over 95% of our revenue goes into debt servicing. And so one of the mandates of DMO is to try to reduce the cost of borrowing for the government as much as they can.
Right, we definitely do draw down that cost of borrowing there from the government side. But thank you so much, Mr. Chuka Awachukwu, is the Chief Dealer, Group Head of Trading at UBA. Thank you for coming on today.
Thank you, Ladi. Have a great day.